Hi, everyone. Welcome. Thank you for joining us again for our third session of Adulting 101. We've really appreciated your time and attention and are very much enjoying as we move through this series. My name is Lori Sharpsteen. If you don't know me already, I'm owner of Out of the Box Properties, a real estate team, and
I'm Joanne Worobec. I am a loan officer with Homestead Financial Mortgage, and we created this first-time homebuyer series to help increase transparency for all of our first-time homebuyers. But this one specifically, you don't have to be a first-time homebuyer for, because we are talking taxes today, and taxes affect everybody who's a homeowner or who wants to purchase a home. So meet our special guest. We have Scott Shipman with the St. Charles County Tax Assessor's Office, and he will be helping us with the presentation today. Actually, he's going to be giving all of the presentation today.
And Joanne and I have been so excited. I know we're just saying this.
Yes.
We're kind of geeky about this stuff. We are really excited to be able to sit down and talk about real estate taxes, assessments, what goes into them, how do they impact the marketplace? Because what we find is most of our clients, when they're going through that first process of buying a home, they know that real estate taxes exist and that they're part of their mortgage. But then after a couple of years, when an assessment happens and their taxes may increase, suddenly their mortgage jumps up in a way that they weren't expecting, and they don't know it, they don't understand what to do about it,
They'll
or
get angry.
what it pays for. Oh my goodness, yes.
But they often blame the wrong person, and so sometimes they blame the lender or the escrow agent, or sometimes they blame the assessor's office, and that's not necessarily the case either. So we're trying to dispel some myths about where the taxes come from, the tax rates come from, what goes into them, and if there is like a discrepancy, how to take care of it.
Yeah. How do you clear something up if there is an inaccuracy? Also recognizing that taxes are a very necessary thing. We all take advantage of things that are paid for by taxes. So living in a place where you pay almost no real estate tax is not typically wonderful for the services that you're going to receive, and also for the value of your property. So all of that needs to be part of your plan that you're building for the future of that huge investment that is your home.
Yeah,
and I'll try to demystify everything that I possibly can. It is a big process, and it does get convoluted easy. A lot of people don't understand it. Unfortunately, it's probably one of the biggest taxes that you pay locally.
absolutely.
And the positive side of that, I've always stated this. Those are local taxes, all but the state tax, which is only about 3 cents. So it's not a big tax rate. But everything else is local. So the school districts, fire districts, and the cities, which are the biggest part of your tax bill, they're all local people. You can pick the phone up, call the alderman, or get a hold of the superintendent and ask questions. How come there's 15 school buses running through my subdivision? That's what we always get. We always get the complaints. How come there's so many city trucks driving around? There's only 2 kids that live on the street. Why they got to send 3 buses?
Right.
All that type of information. They get
you
to vent
control
to
all
us.
that, right?
Right. Yeah. We control none of it.
You just make a phone call and say, hey, no more buses on
That's
the
right.
street.
Unfortunately, we don't have control over any of that information, but we do provide a format for the taxpayer to come in at their time, at their leisure, and discuss their value. And at that time, they just regurgitate everything that's bothering them for the last however many years it's been. That's the unfortunate part, is they don't get that directed to the tax entities. So, I'm going to start with how we compile the assessment roll, which we're responsible for annually. Reassessment happens every odd numbered year, unless you have new construction. There's a lot of work that goes into the assessment roll. A lot of people think we guess at everything. We don't. I don't have a dartboard in my office, I swear. We don't count the number of cars traversing I-70 and pick out a blue one. Nothing like that happens. The guys and the girls in the field measure every piece of property in St. Charles County, from General Motors to, the river shacks. So everything is measured. We get copies of all the building permits from all the municipalities and the county. So anytime something's going on permit-wise, we're aware. We go out and we update the records, whether it be a deck, in addition to the home, basement finish. And then we also have another avenue. I term them neighbor narcs. There's always neighbors ratting out somebody.
Yeah.
Hey, this guy's doing this. He's putting up an outbuilding on his property, and they'll make a phone call. And we don't rush out there, but we try to collect that data in our normal update of a reassessment cycle. And don't forget, the assessor's office is also responsible for all the personal property. So if you drive a car, you're declaring that every year. We're the ones that value it, and it does get taxed. The same tax rates get applied, at least in St. Charles County, to that personal property as well as it does the homes.
Interesting.
So, and this year, this is we've drained a pond now. We're up to our knees in alligators, so we've sent all of our notices out. So the phones are hopping. We're making appointments, which is good, is what we should do. It's part of our job. But on your notice of change in assessed value, you'll see a little QR code that you can hit with your iPad or your iPhone or whatever type of media device you have, and it'll go right to your data page. It'll tell you all about your property. You have a sketch of your property, the legal description, rooms, bedrooms, bath, size of the property. I encourage you to do that. Check and make sure everything's right. That's the first thing you want to do, is make sure we've got our accuracy correct.
I mean, now is the time to do it, because if you let it go too long, you can't go back.
Correct.
What is the time frame that you have to point out any discrepancy?
So our informal hearings run till about the first week of June, but after that, the second Monday in July is the hard stop for the Board of Equalization. If you miss that date appealing, nobody can do anything. State representative, senator, president of the United States, nobody can do anything. It's a hard stop. It's
State
important
that
to know
date
that date. It's the second Monday in July. It's
go.
on the
Second
back of
Monday
our
in July.
notices too.
Okay.
So all that
Okay.
information is on there. But it's important, if you want to appeal or continue your appeal, if you're not successful at the informal stage, appeal to the Board of Equalization.
And I find that as a realtor, I have been surprised at how many, certainly never in St. Charles County, but how frequently tax records are inaccurate. I've found certainly numbers of beds, baths, square footage, those are some relatively simple inaccuracies, but I've run into situations where a property has actually been declared as non-owner occupied when it really is owner occupied, just because at some point in time there was a difference between the mailing address for the tax records and the physical address for the property, and that's all that really takes. I've had one client who he had a home built, and we went to sell it 20 years later, and it had been wrong that entire time. So that's not something you can go back and say,
No.
hey, can you fix that and rebate me back for
No.
what? No, it's
And I've
just
seen
done.
people actually have liens on their property because they didn't realize their tax bill was coming in so high because of a discrepancy like that, and then it's
It's just a big
too
quagmire. It's a lot to try
Yeah.
to try to navigate and clear up at that point.
It is. It's complicated, but it's also simple.
Call
To
you?
digress a little bit back into the three components of that tax bill. The assessment authority, which is us, we're responsible for assigning the correct property value on each parcel in St. Charles County, just like any assessor would with their county. The tax authority, tax entities, and they're listed on a property tax liability notice that you get from us, is all the tax entities that you pay a tax to. So if you think your taxes are too much, you don't come in and beat on the value if the value's right. If you think you're paying too much for the services, you have a responsibility there too, to go to the school districts, fire district, city, or wherever you think you're paying too much for your services, and make your voice known. The collector, all she does is collect, or all they do, I should say, is collect the tax bill when it's sent out. At the time that tax bill's sent out, there's nothing anybody can do to change it, unless it's double taxed. That's something that's in the statute. But it's funny, if you've got a disgruntled taxpayer over the value, say they just bought it or something like that, they can still appeal to the state tax commission, but the appeal process essentially is over when we certify our values July 1st. So the only authority that can make a change in value after July 1st is the Board of Equalization or the state tax commission.
Interesting. Yeah, I had no idea. And something else revolving taxes and real estate taxes in general that I run into a lot that I just want to clarify too is just because you rent doesn't mean you're not paying taxes. So whoever you pay rent to, they are paying taxes. You're just helping pay it on their behalf. So while somebody who doesn't own or maybe doesn't intend to own may think this is not an important conversation for you, I would beg to differ and say it is at least critically important to understand what it is and what your neighborhood and how those circumstances will impact you, because an increase in the tax assessment is going to increase your rent. That's just how that works. It's math, right?
That's right. And you're still using the services. I mean, you do, because you're a resident there, you have input on those services whether you own property or not. And you're still a resident of that city.
And it's a good reason why we should all vote.
Yeah, it should all actively participate in the process.
Yep, a lot of the school bond issues that get passed are passed in early voting months, April. And I can't tell you the number of times that I hear we didn't vote for that. And most of the time people don't vote. It's a 10 or 11% turnout. So if you think about it, half of them are voting against. So you got 5 to 7% of the people that may be passing a serious bond issue for everybody in that school district.
Yeah.
It's important to pay attention.
And you can't say you didn't vote. Your no vote
is a vote. Yeah.
So you still had a choice. Yeah.
Yeah, I mean, that's important to pay attention to those bond issues. Pay attention to the wording on the bond issues. You know, a no tax increase means they're just extending the bonds. Joanne, you might know something. It's like a refinance is all they're doing. So they're continuing that debt, which means it's not going away. So a tax reduction won't happen.
Probably not reducing.
No, that's right. But those are all great points. And it's something that the citizen should be involved in. But the value side of it, you know, when you get your notice, open it up, take a look at it, check to make sure the information's right. Use our website. We got a ton of information. You can search for comps. You can ask your neighbors, hey, what yours is. We always get that back and forth. My neighbor's is more than mine, and it's exactly like mine. When we pull it up, and his is a 2-story, and they're comparing it to a ranch. All those types of things you ferret out.
You know, that's a great point. I want to bring that out. So, you know, some of our websites that our first-time home buyers really like to look at. What is Zillow?
The Zillow and the Trulias and the Realtor.com.
And where are they pulling that information from?
Yeah, they pull that information from tax records, particularly and solely, almost exclusively from tax records in the St. Louis marketplace. So they don't have, when somebody's scrolling through and looking at their Zestimate, there really is not good hard data to be able to come up with that number. And if you really dig deep into how Zillow rates their own accuracy of those estimates in the St. Louis marketplace, they can be off, according to them, they can be off up to 40% either direction.
Yeah, I look at those things frequently because taxpayers or citizens do bring that in. And my word of caution is just look at the name of it. That should tell you something. I don't even know what a Zestimate is, but you know, when they do comparisons, they'll compare split foyers to a ranch, 2-story. They grab a geographic area. They don't know the intimacies of the properties. They don't know anything about them. It's an algorithm.
It is. It's not
a proprietary
person.
Algorithm.
There is no person making these assessments. It is all an algorithm. And nobody, when you update your basement, they don't check permits like you do. You're more accurate because you at least check permits. Nobody comes and knocks on your door and says, hey, I heard that you remodeled your basement. Can I come check it out so that I can update your Zestimate? That just doesn't happen. So, and I
don't want to badmouth these companies. It's just know where your data is coming from.
Right.
You know, so we've talked a little bit about where your source data is coming from.
Right.
But, you know, where's
some
their
of those
source
other,
data?
right.
Yeah, I don't think that you'd make a decision based on a Zestimate, not knowing the behind the scenes data. You know, if there's one thing that I hope the audience takes away is we don't have a motive in our value. There's not a red phone that sits in my office and the school district calls and says, hey, we need 6% this year. It doesn't happen that way. All that does is cause us grief. We want to be accurate. You know, we have to answer to what's right and what's wrong. So we want to be right. So if you need sales or you need information like that, call us or hit the website. It's free information and it's reliable.
It is much more reliable, and it is much more accessible than people sometimes think. You know, looking up tax records that are public records. I do that all day, every day in my real estate practice, and it's not exclusive to me because I'm licensed.
I mean, that's a very good point, because I know that for the longest time I didn't even realize I could look up all this information online, and it is accessible to the general public.
It is.
So use it. You know, you can see when the house has been sold, you can see the square footage, you can see everything that's been collected in one nice little place.
Oh yeah, those tax records tell me a whole story and a history. I go back and can look, oh, an LLC bought it here, and then they flipped it, and then they got this, and then this is what happened here. So there's a lot of good data there. And those other websites, to your point, they have value. The Realtor.com, the Zillows, they are very easy apps to use. You can see a lot of raw data and a lot of really cool pictures. It is slow to update, so oftentimes, you know, by the time it hits on Zillow that it's gone under contract, it actually went under contract several weeks ago. So it's not accurate, but it will give you a good broad flavor of a marketplace that you're looking in before you really get involved with an agent. And then honestly, we can direct you and provide you with much more accurate tools that work in a very similar way. But it'll give you much better data to work from.
Our team is out canvassing, you know, the properties in St. Charles County every day, and we have a ton of information in-house. From a comparability standpoint, we use a neighborhood analysis, not specifically the subdivision, but a comparable neighborhood. And if you think about the other sources that use our data, appraisers use them, real estate agents use them. You know, appraisers use them from the standpoint, if they're looking for comparable properties, they'll look at our square footage. Now, if that was wrong, they could provide a misleading report. So it's important that that information is right. Our team's out reviewing the property. They don't do drive-bys. That's a bad word. We do curbside reviews. It's the same thing.
You actually stop the vehicle.
Yeah, but if you picture this, you know, they have a laptop in front of them. They've got all the information about the property, and they're just looking at the overall condition of the property, making sure that our information's right.
And it's much more accurate that way. I know a lot of people will utilize sources and they'll look at Google, you know, Google Maps, and try to. For example, I had a phone call today from a out-of-state buyer on a potential investment listing, investment property in the city, and they're looking it up, and they're like, Lori, is there a building next door that's like falling over? And I'm standing in front of them like, yeah, no, there's an empty lot. And I talked to the homeowner, and they say, well, in 2016 there was a gas explosion in that home, and it blew up, and as a result now it's been torn down and it was an empty lot. But what the data they're looking at, because that's when whatever the little Google camera thing is, that's when they happened to buy that property.
Great.
When it was in that position.
Great point. Another resource on our website this year is the pictometry technology. So it's the 3D oblique photography of every piece of property in St. Charles County.
That's really cool.
And it has the snapshot of when that date was taken. So you'll know exactly when that plane flew over. And we're doing that for the next 3 reassessment cycles, which will create a record. You know, hopefully going forward, you can go back and see when things have been demolished or burnt, or was it there, was it added. Right. So it's a huge reference point for everybody to use. Insurance agents, appraisers, homeowners.
Okay, I have a question, because we've kind of brought up appraisals now a couple times. So what's the directionality of conversation between appraisers and assessors? Just I know, but I want you.
But we want them to know.
Exactly.
Yeah, I mean, assessor. You know, from an assessment standpoint, it's mass appraisal. We do the exact same steps, probably way more than a fee appraiser would, but it's done in mass. So we're using a universe of properties to make our predictions. It's not an algorithm behind the scenes or anything like that. I mean, it's controlled. It's an environment that we know. As far as an assessor or an appraiser, I mean, I'm a certified appraiser. We have, 5 or 7 certified appraisers on our staff. So they all know, and they're all bound by, specifics and USPAP and those types of things, so not to create anything that's misleading. It's not that we
However,
don't know what's going on.
When an appraiser does their work, an outside appraiser, not somebody who's in the assessor's office, do they give you that information?
No.
That's
The only
kind of
way
where
we
I'm going.
Yeah.
the only way we see generally the way we see appraisals is somebody's refinanced, because in St. Charles County, like St. Louis County, there's a disclosure of sale price. So every time a piece of property transfers, they have to disclose the sale price. So we get the sale price. We don't get the appraisals unless they refinance and we're overvalued. We never get them if we're undervalued.
Yeah.
Very seldom, I should say. So
Well,
they'll send in
why
their
would
appraisal.
anybody send
Exactly.
And we look at the appraisals and, we review them and see if they're accurate and if they're consistent. And if they are, we'll be the first ones to adjust the value. But a lot of times we find mistakes and we don't. And that's a tough conversation with the homeowner because they've paid for that. And they've engaged in a professional and they get the report and they really don't know the intimacies of that report. But we find mistakes and it's not a slam dunk for us. We review it. We look at it and see if it's right.
Yeah.
And errors do happen, and particularly in the fast-paced real estate marketplace that we're in right now. We are in a very unique marketplace for the history of tracking the marketplace, like the lowest interest rates in 3,000 years since it had ever been tracked, right? And the highest speed of turnover of properties. We've talked about this a lot. If in the St. Louis marketplace we have 1.5 or 1 1.3 months worth of available inventory on hand, meaning if we just stopped adding more and continued selling at the same rate, we would run out of properties in a month and a half, thereabouts. A balanced marketplace, equal for buyers and sellers, is 6 months of available inventory. So when we hear this all the time, right? Oh my God, there's going to be a housing bubble. Oh my God, the house is going to burst. We have to get past 6 months to be able to even do that. There is so much value in properties right now, and so few properties compared to so many buyers that's mathematically, unless, who forecasts murder hornets? We don't know what's going to happen, right? Anything could happen, but based on available data we have, there's not an expectation the market's going to suddenly burst or bubble. But being able to use the data that we have appropriately is going to help us make those good decisions for our clients moving forward.
Unfortunately, the real estate market doesn't move like the stock market quickly.
Right.
We hear warning shots usually from the east and west coast,
Yes.
and then it kind of reverberates in. So you'll know when things start to happen.
Yeah. Houses are still selling high and fast on both of the counts, both of the coasts, with 50 offers out there because their market is a higher property value. They're going 100,000, 200,000 over list price. So there's a lot of that still going on.
But that may equal out
Yes.
here soon because there's only so much money people are willing to pay over asking, and so if they just feel that they're going to be outpriced, then they may give up for a while.
Yeah,
so
and I am seeing some of that too with some. I would call it buyer fatigue, or buyers who are saying, I'm going to wait and see how everything pans out, and that behavior in itself is going to help stabilize the marketplace.
Right.
So all things change, all things ebb and flow and balance, and it's just a matter of being able to gather all of the right data that you need to make the best decision based on what you know at the time when you have to make that decision.
But,
and that's why we're doing this.
Looking at one of the slides, St. Charles County is a bedroom community. If you look at where most of the assessed value is, and when I say assessed, residential properties assessed at 19% of its market value, commercial's at 32%,
Okay.
agricultural's at 12%. Cars, the most hated tax, personal property, is at 33 1/3. So
Wow.
yeah, That's why there's such a push to get rid of it.
Yeah.
But you got to replace the revenue.
Yeah. Yeah, you got to replace that.
But if you look at the graph, I mean, it's, what is it, 22, 23% is commercial property. But there's a little bit of a caveat in there because that's only commercial property. It's on the tax rolls. So these properties like the Amazon building and those types of things are in Chapter 100s. That value's not included in there.
Gotcha.
So those those properties are not really contributing to the tax base the way a homeowner is.
Now, what is, for everybody who's sitting in on that, what is a Chapter 100? What does that mean?
Let's see, I'll try to keep it simple because it does get confusing, but it's an economic development tool to where the cities usually will purchase the property or buy it back after it's developed. They get it, bonds issued to them, and then the tenant, or Amazon in this case, pays back that bond payment,
Okay.
repaying what they've, the building and everything else that they've got inside that until the bond's paid off.
Okay.
So they're not technically on the tax rolls.
Gotcha.
So it's important.
It is
Absolutely.
important because that's something I hadn't really realized, and something that we talk about a lot in the real estate marketplace too is the transition through our whole all the behaviors that have changed over the course of the last year and a half because of COVID, the changes in the commercial marketplace and the commercial real estate marketplace.
I would assume that we're seeing, less commercial.
Yeah, commercial, the new construction commercials definitely down.
Yeah.
There's no doubt about it.
I mean, people are now apt to work from home.
Right.
There's less people necessarily going out, just spending their money freely. They're doing a lot of shopping at home or.
It was a challenging reassessment
Yeah.
for us from a commercial standpoint because there are winners and losers.
Right.
The warehouses and storage centers and those types of things, they continue to increase in value. But the retail, obviously,
Right.
some of the entertainment-related venues, they take a hit. Hotels is another one. And, to be honest, there's still facts to be found in that market. So, a lot of those things we, still need to be flushed out.
Well, and so many people now, because their work has changed, and now they are working at home, and many businesses are deciding to keep people working at home because they've found it to be more efficient. I've worked with a number of clients that are like that. So now that allows that buyer so much more flexibility to be able to live where they want to live. And again, make some of those decisions based on property values, which also includes taxes and the tax decisions and what services are available. So again, as I'm seeing a lot more of the buyer population buying and shopping differently, instead of trying to stay within 20 minutes of their employer, now they're like, hey, I've got a little bit of flexibility. I can live where I want.
Exactly.
Right.
Now they're exploring some other areas. So I think it's even more critically important to understand that those other areas are everybody's got a different tax rate.
So let's expand on this a little bit. So you were talking about the bonds, right? And there are certain bonds for residential as well, and we are seeing people going out further, trying to find the home of their dreams. Now people are starting to look more into new construction. There's bonds
There could be.
that could be.
Yeah, there could be NIDs or SIDs,
Right.
neighborhood improvement districts, and those are
Yeah.
those are bonds issued for the purposes of developing that development. It could be streets, could be sewers, could be water, could be any of those things. So if you're buying into one of those communities with a NID, you need to make sure that you're educated on what that NID payment is. We get that all the time at the end of the year. My tax payment went up $600, and we're thinking, there's no way it's possible.
Right.
And we look, and the NID,
And the NID
it's the
is in
NID
there.
is what's on there, and that stays on that property until the NID is exhausted or paid off. And it could be 10, 20 years. It's definitely something
Yeah.
to be considered.
It is.
Even when you sell the property, it could have an impact on the sale.
Absolutely.
Absolutely.
And
So-
that would be for me. That this is the sales pitch that says even though you're buying new construction and you walk in and the person that you meet there is a representative of the builder and they're really nice and they're really friendly and they're helping you pick everything out, it is critically important that you have your own representation, and you have a right to that. in order, because those are the things that we look for. Those are the things I look for, is reading through that, whatever, sometimes it's a 47-page long builder contract, and buried in there is the language about the SIDs or the NIDs and the things that people, they don't realize
even realize.
until a year later, and that's how that really happens.
And the other thing with new construction for counties that have occupancy, which St. Charles County does, keep in mind that the value is prorated the month that follows occupancy. So if you move in June, the value is prorated from July 1st forward. And that gets confusing to a lot of people too, but I always say that the loan officer, the lender, or whoever's closing the deal has all the information they need to properly project what the taxes are going to be, because they got the sale.
Right.
And if they take that sale price and divide it by 12, you know, obviously, and apply those taxes.
And apply that percentage.
Right.
that
Instead of taking the
modifier.
prorated amount,
Right.
then they get the full year's tax bill the next year,
Right.
and it's went up thousands of dollars, and
Right.
it has an impact on their life.
It does.
You know,
it does.
it's sad,
And we
really.
see that all the time.
They say they didn't know. I'm thinking, my goodness, how could you have not
And they
known?
didn't know. They didn't know that they didn't know. They didn't know that that
Right.
was even that existed, or that's something that they
Right.
should know about. Which is why we do these.
Right.
Honestly.
And we send notices out with the occupancy, just like reassessment notices. But you know, a lot of people, it's the 3 to 5 second. You know, when you get that and you open it, if there's something that doesn't catch your eye, you put it down, and the next thing you know, your
And
tax
something
bill's
else
here.
goes on top of it.
Right.
Absolutely, yeah.
We should put it on milk cartons. Everybody reads those.
That was a while ago.
Yeah, do they? Now they're all in bottles.
Yeah.
Although water's now
Water.
back in cartons,
Yeah.
so maybe it'll all transfer back. Who
Hopefully.
knows?
But I bring, you know, a lot of citizens think that we're not controlled by anybody. This graph here that's on the screen now is a ratio, and what it is it compares our value to the most recent sale price. Okay, so we should be at 100% of value, market value, and we tick between 95 and 100. And we've got the reports from the State Tax Commission. That's who monitors our values. And if you're out of tolerance, you have to do something. Now, I've never heard of a county being out of tolerance high. They're always out of tolerance low.
Low.
They're 60, 70% of value.
Oh, wow.
And they need to get their values up. But you can see we get accused of never dropping values, but those red marks in there are years when the market was actually declining. You know, sale prices were declining and we were over predicting. So we had to drop values, and you can see it happened on the odd numbered years where we corrected the values, and in a declining market, we still over predicted. You know, just like in an increasing market now, you can see those last few months we're behind the market, and we increase the values, get it back up to 95%. But in an increasing market, we'll continue to drift away from market value until the next reassessment cycle. It's kind of an interesting chart.
It is.
Absolutely.
It is. It does kind of break some of those myths.
I'm interested in what's going to happen 2 years from now with how it is now.
Yeah.
Yeah, I don't know. You talk about the housing bubble,
Right.
and
Murder
as
hornets
long as
again, who
interest
knows?
rates stay low, and there's still a shortage of supply, you know, who knows? I wish I did know.
I'm concerned. Just from what I'm seeing, you know, there's been a lot of reports of very high default rates right now, but they're not. There's a foreclosure moratorium right now.
Right.
Foreclosure moratoriums and eviction moratoriums, and so you know we don't have the natural. There's a spigot.
Right.
We don't have the natural ebb and flow of the
Yeah,
market, and
we've got a cork in it right now.
We have a
and
cork in it.
When that cork pops out, then it's going to seem like there's a whole lot because there was a backlog of things that should have been
Possibly.
occurring, maybe.
Possibly because, you know, we've already been hearing reports about how instead of allowing those homes to go back on the market, they may be doing loan modifications and
Yes.
putting the missed payments on the back end. So, you know, there is speculation that there is a bubble, but there's also speculation on how to fix the bubble and what that will look like. We just don't know yet.
No,
So-
no, we don't have enough data. But what I don't have any visibility to, or don't certainly see any indication of, is some big event, something happening that's going to be. I don't certainly not another 07, 08. That was a completely different market. when home values weren't there and there was a glut of properties to sell on the market. Now, if people have held their properties for 5, 7, 10, 15 years, and they have a financial negative impact and have to sell that property, there is value in that property where it can be sold and they will walk away with a check instead of being foreclosed on. Now, that's still a devastating thing and life-changing, but not like a foreclosure is.
Correct.
And that doesn't create that glut of properties on the marketplace. That the secondary piece of all of that you and I are very much aware of is hovering around all the outskirts are investors with tons of money and tons of cash that are just hovering, waiting, and they will swoop in and pick up those properties when they're still at this level, before they get to this level. Somebody's going to buy them.
Now, though, Fannie and Freddie did implement, basically they wanted to reduce the amount of investments in their portfolio, and so now investors, if they're getting loans, they're paying a couple points more than they were. So they are trying to slow that down, but there is still a lot of cash there, and they are still trying to pick up those properties.
There is. There's a ton of cash out there, and we've talked about that a little bit too, because what's happened in the real estate market, and it's if you follow anything about real estate, you hear a lot about where in the world's all this cash coming from, right? How is somebody able to come in and buy a property for $400,000 all cash? And it's not just one or two. We're seeing a lot of in some of my recent listings that have gone under contract. I've seen a tremendous increase in $150,000 cash on a $400,000 purchase, or that's significant, right? So there are a couple of places that I see it coming from, and I'm sure there are more that that I just don't see, right? So there are, because of migrations of people being able to move away from their place of employment and they can live other places, there are migrations to the Midwest, and St. Louis is an advantageous marketplace because of our low cost of living and our high level of services and amenities for people who are moving from markets like California or like New York, where maybe they sold a property that here would be $300,000, there would be $1.2 million, and they walked away with a bunch of cash, and they come here and it's like, oh my God, you can buy a house for this? Here's my cash. So there's a part of the market that is impacting, and as well, what people don't always realize is the cash is not always, like, nobody shows up to closing with a suitcase full of cash. That part, right? That just doesn't happen. But the cash is not necessarily cash that they end up using for the transaction. It's just cash that they have the ability to show is accessible. So what's happening is people are utilizing, say, a retirement fund account that has a significant value to it, and much of it may be readily accessible. So they make an all-cash offer, and their proof of funds is that account. Now, many of us, unless you look at those statements all the time, not everyone is astute enough to say, this is vested, this is accessible, this is not accessible. How do you figure it out? It's just, oh, cool, here's a statement, their name with a really big number on it.
So it's a placeholder.
It's a placeholder
for
no
cash.
Financing necessary, but then they do get financing.
But then, after you go under contract, then they do go ahead and get a mortgage, utilizing whatever amount of that cash they need in order to meet the contingencies that they've released. So,
and there's certain techniques too, the recast and stuff like that. You can actually borrow from your 401k. There's other avenues to make things happen, but initially they don't have to show that they need financing. They look like they're good on paper.
Right.
Yeah, it's
and they are good. They are good.
They are good on paper.
It's just that the confusion that happens sometimes is that then when you get further into the transaction, and then an agent or a seller may say, whoa, wait a minute, why is an appraiser showing up, or why is there a loan involved with this now when this was an all-cash deal? And that's why now, by making that all-cash deal, they've written it so that they've released contingencies anyway. So at the end of the day, the wire transfer is the same dollar amount, and it's good for the seller. But that's something that we had talked about quite a bit before, is where's this influx of cash coming into the real estate marketplace and
Yeah,
into
and
St.
in the truest definition of fair market value, it's a willing seller and a willing buyer. I'm sure that during our hearing process, we're going to have some citizens that come in and say, "Hey, I overpaid. I know you know the sale price of it, and you have it at X. Maybe not be the sale price, but I overpaid by however much."
That's actually where I think the bubble is probably going to come into play, is people overpaying on their homes and automatically going into their home underwater.
Right.
Well, and what's also happening is it's creating an incredible upflow and peak in our marketplace, because you close today on something that where you paid $30,000 over appraisal.
Now that's a comp.
Now that's a comp. So that's a comparable property
pretty
for
quick
those of you who
incline.
Right. So then when the appraiser is coming out and appraising that house next door, and they say, "Oh, okay, well this one sold for this, that is therefore how much this one is worth."
Right.
So it continues to flow upward until you hit a peak of people's willingness to pay for that.
There's a couple other things too that are driving the prices going up. One is, we never fully recovered from all the construction businesses that went underwater with the Great Recession. So we already were a little behind with the population growth. Two, though, again, COVID, but material prices have now tripled to quadrupled. And so, if people are getting new construction, they're
That's
having
where
to
it's really.
price increases repeatedly now
Yes.
because to keep up with it. So that's also going to start driving, but it already is driving up some of the values.
Yeah, I
of
think
these
back
homes.
in the back during the depression of the homes that were being built, we were at 32 to 3,400 new homes. We've been at about 16 to 1,700 over the last few years. So that deficit right there applies to the shortage as well.
It does.
So there's 1,700 homes
well.
that aren't being built to be sold in St. Charles County, which creates more demand.
Yeah.
Right. Yeah, so I would be interested to look at then what are future permits looking like in the short term for projected new construction. When I'm working with clients and we're looking at new construction homes, I've run into some builders in some areas where they've just said, "We're not showing anymore. We're not selling anymore."
I've seen that too.
We have a 50 house backlog, and until we can complete some of those and complete
we
those
don't even
transactions,
think we're going to complete them for 9-12 months.
right? We cannot. Our display homes are locked up for right now
Well, I
because
think
they just can't. There's not enough materials, not enough skilled labor.
Right.
That's another problem. They're having issues actually getting labor to
And that's been
do the job.
building for the last 15 or 20 years. But that's a whole nother
That's a
conversation.
whole nother conversation.
But I think to Joanne's point, I think that's right, that a lot of the developers and builders are still stinging from what happened.
Yeah.
I mean, there was massive land grabs. When we were seeing golf courses falling for development in St. Charles County, I'm looking at the math that they paid for their acre, and I'm thinking, how can they possibly make any money
Right.
on this deal?
Right.
But that's not happening anymore. They're not grabbing big chunks of ground just because they're
Just because
taking a
so
little
they
slower.
can have it for the future.
Yeah.
They're
Right.
being more careful. And they have to keep their available funds for whatever is happening in materials, in lumber and
Yep.
PVC, and you can't get a polymer to make PVC now. And I mean,
There used to be developers, and they'd sell lots to builders.
yeah,
Then they kind of combined, and the builders got big, and they said, "We'll develop our own land. We sell a better product." And then the sting came. Now they're back to separate. There's
Right.
developers and builders because they don't want that type of,
liability,
and
yeah,
collateral hanging on like that.
right. So anyway, so we have a tendency, forgive us,
Yeah.
we get off topic quite a bit. In case those of you who have followed us have probably seen that in the past, but so yeah, let's get back to taxes.
Sorry. It's all relative, though.
It is, and
it
it's
is
such a fun conversation.
Yes.
It is,
us.
And
Sorry.
taxes, the real estate tax is really not complicated. It is based on value. You know, it is independent from the tax rates. You know, the values are developed before the tax rates are even calculated. You know, I can't remember the song, and I'd said this off camera. The song "All About the Base."
Oh,
That's
yes.
what we're about, the tax base. We're not about the tax amounts at all. You know, if we're doing our job right, we have every property correctly valued, and people can be assured they're paying their fair share. I mean, that's what we want. We want equity, we want equality. We don't want somebody being overvalued or undervalued and not paying their fair share. So in simple terms, it is about the base. And the rate happens after. A lot of people don't understand that, but the tax rates are developed afterwards based on the budget for the services. So it's pretty simple. That's another diagram that's on the information that we send out to try to make it less complicated.
I don't think people have the correlation, so I'm glad that it's included this time around.
Well, and all the things that we talked about just now with housing and with new construction, they also correlate over to services. So increase of materials impacts building, impacts roads, and you know the increase in cost of skilled labor, because there is a shortage of skilled labor, impacts how quickly or how effectively you can build roads, or you can, you know, the police force and what they have. So all of those things do run together. They're not completely separate and independent.
Right. You know, a little more information about our data, just to try to demystify things. Wood decks and garages and those types of things are not counted into your square footage. If you look at that sketch that we have online, it's pretty detailed, and each one of those segments or polygons are separated for a reason. If it's a two-story home, or even if it's a one-story section of a two-story home,
Right.
we have that delineated, as well as an atrium and those types of things. So we're using ANSI standards as far as the square footage. Below-grade basement finish is not included in our gross living area. It does have an impact in value. I'm not saying, you know, don't take away from the conversation that the assessor said basement finish doesn't have impact on value. It does. It has an impact. It's just not included in that gross living area.
Right.
Now, question, but bathrooms are, because it's not gross living area.
The
Right.
bathrooms are, that's right, the number of bathrooms.
So even if a bathroom is in the lower level, it is included.
That's right.
You're not living your life necessarily in your bathroom.
Hopefully not.
Right.
I mean, maybe.
But, you know, we get citizens that'll get a builder's plan, and they'll measure the inside of the
Yeah.
home. Our measurements are taken from the outside of the house, rounded to the nearest foot. That's with every piece of property in St. Charles County. So if you're measuring the inside and you add your rooms up, you're not including walkways or hallways,
Yes.
stairways, closets, or anything like that, and maybe even bathrooms.
Right.
So sometimes that square footage could be different. So just realize that they are outside measurements, and I think that's standard with most assessing officers. They're looking at the outside measurements.
It is, and we as realtors, at least I specifically, I pull my square footage data directly from the tax records. That way I can move any liability over to that direction instead of, so it is important, because that does happen a lot, where people they'll go to buy a house and then they'll go in and measure the dining room and say, this doesn't add up, and that's because it's exterior measurements, and it's measured differently. And we, in our area of the business, that's the data that we use, because then everything throughout the whole line is clean and consistent.
That's right.
So then
It's a
you don't have a
standard.
lot of discrepancies.
Yep, but it's an important piece of information. It's an important fact that should be checked. It's not hard to measure your home. We go out and re-inspect things all the time. You know, if a homeowner suspects that we have something measured incorrectly, we're the first ones to go out and correct. I could hold up an invoice for the number of 100-foot tapes that we go through every year. So the boys in the band are using them. They're not chewing on them.
I use a laser one, but I do it inside.
And we'd use those as well. We use a combination of both.
Yeah.
But, you know, I'm not going to tell you that every one of them is exact, but we do pressure check our data and go back out and measure them just for accuracy. And for the most part, they're accurate.
I like that answer.
So where
Well,
are we
I
at
know.
next? I can see it, I can't quite read
Me
it.
neither.
Appealing, oh, there's a myth.
There's a myth, square footage. We're ahead of the game.
Oh,
Yeah.
yeah. Wow. How did that happen? We're always behind.
Basement finish is another, that's probably our Achilles heel as far as any data that's collected, because there are a lot, I shouldn't say all, but several homeowners will finish their basement without a permit. So
It
we
does
we
occasionally
simply
happen.
don't know about it unless their neighbors rat them out. And
Or
that happens.
unless it comes up in a real estate transaction. I've had that happen where had a buyer and we identified, oh, this basement has just been refinished, as has the kitchen been redone in the bathroom. Then as a responsible representative, for the area that I was in, not St. Charles County, I look up permits, and there are no permits. So I let my buyer know, and they do their due diligence and call and find, well, what happens? What could happen if I purchased this home and this work was done without permits? Well, you own it, you own the problem. So if it's identified, then you could have to rip it all out and redo it.
Right.
And we did end up moving on to a different property that didn't have that liability on it. So where oftentimes homeowners think, hey, I can just do this myself and no one will ever know, when you sell it, sometimes that'll come up.
And it'll come back to bite you.
It will.
And we do
You could
pick
lose
up,
money on the table.
we verify and validate every one of the transactions that come through. So we look to the realtors a lot of times, a listing agent or selling agent, or the buyer or the seller, to make sure our information is correct. Now the seller doesn't usually care; he's selling the house.
Right.
The buyer could be a little apprehensive, to tell you what's inside, but we ask things like, has the kitchen been remodeled, the bathroom, and then we code those in a way so when citizens come in and we run comps, we know what those properties look like. We ask probing questions. Has your kitchen been remodeled? No. Has your bathrooms? Yes. So we can look at those parameters, run the sales in that neighborhood that have those similar situations, and say, look, here's a range of value of what this thing is worth.
Well, and I think it's important to recognize as well that permitting is not just, it's not a money grab. It's not the municipality just wants you to have to pay for a permit. The basis of getting a permit is to ensure that the work is done in a safe and acceptable and professional manner.
And codes are there to standardize that and to make sure that you're not going to burn your house down because
Right.
there's an electrical
They
issue.
protect,
Because you don't
It's
know what you don't
protecting you.
know.
they're
Yeah.
protecting the residents. A classic example is drive down the Lake of the Ozarks and drive around the lake.
Yeah.
I call them tax income refund homes.
Yeah.
Somebody gets a little money, they add on, and there's always problems. The electric, you read about them in the paper,
Yeah.
terrible things happening. And because there's some of the counties don't have any codes.
Right.
Yeah.
So, I mean, that's what you're left with. Or houses that are falling into the lake. I mean, same thing.
Yeah, so be aware those standards are there to help protect you and physically as well as protect your investment. Because if you later you do have a fire and you have an insurance claim and it's later identified that it came from unpermitted work, that creates a substantial liability in many cases.
Yeah. They may not pay out.
Right.
That's right.
Right. I'm not an insurance agent. I don't pretend to be. I have wonderful ones to talk to, but always just protect your investment
Right.
and your biggest investment, your family. Right.
Well, what other questions do we have here?
Yeah.
Oh, easy way to calculate your tax. You want to talk about that?
Yeah. Go
Yeah.
ahead.
Okay.
We love easy buttons.
Yeah. So from a realtor or a lender or the citizen, we always get comparisons to Illinois about they don't have personal property tax. That's right, they don't. But what I term an effective tax rate, which is your tax rate divided by the assessment, which is 19% for res, yields an effective tax rate of between 1.3 and maybe 1.5 in St. Charles County. So if you know the market value of a home, you can just multiply that
Right.
by that effective tax rate. It'll give you what the tax liability would be. Now, in Illinois, those tax rates for houses is up close to 2%.
Yeah.
So it is because they don't have personal property.
Right.
And I'm not advocating
the money's
for
gotta
personal.
come from somewhere.
Yeah, you're going to pay for it somewhere. I'm not advocating for personal. It doesn't matter to me. Again, we're not revenue generators, but you have to look at the full picture
Right.
before you can
Compare
make those
apples to
statements.
apples.
That's right. And commercial property, the effective tax rate's probably 2.2 to 2.4. So if you're looking at commercial property, it should be somewhere in that range.
But one of the things about having, the lower tax rate on your home versus, comparatively,
tax,
right?
right.
Is your home is going to appreciate.
Yeah,
Your car
you
is
don't get a
not.
benefit in the value and in your investment for what you're paying in taxes.
So while you may not be paying personal property tax, your home's going to appreciate. You're going to be at a lower percentage.
Right. Well,
It's just a better financial investment
yeah.
sometimes.
And a citizen does have a responsibility in making sure their assessment's right, and also making sure that the tax entity is spending the money wisely. With the notice that we send out, there's a property tax liability notice that's required, and it'll give you last year's taxes, this year's projected taxes, and then the tax rates in a comparison and the percent difference between last year's and this year's. So at that point, look up and down that, and if you think you're paying too much for the services, call them.
Yeah.
I ask the question all the time to the school districts, how many people attend your budget meetings?
Right.
None, or
Yeah.
2.
Right.
But everybody will come in and complain
you.
about their value,
Right.
Yeah.
even though the value may or may not be right. But, there is a second responsibility.
Well, and recognizing, I think it's important, and maybe I just thought about this, so I don't know. I think it's important to recognize that, again, we've had so many changes over the last year and a half because of COVID that those schools are run differently. Is it more expensive? Is it less expensive? I have no idea. What is the impact on policing? What is the impact on road maintenance? If there were fewer people driving on it, now there are more. I mean, that's a lot, right? But all of those are all very valid questions, I think, for a taxpayer to be able to call
Absolutely.
and ask those entities. What are you doing differently in your process and your expenditures now? Why has your income not changed, but what you do changed substantially?
Right. So as the value goes up, the Hancock Amendment, and I don't want to get in, that's very complicated, but as value goes up, the tax entities should roll their rate back to offset that gain,
Okay.
with the exception of new construction and the CPI.
Okay.
So if you look at those rates, you'll see a lot of rates did go backwards. Tax rates did. The value went up, so they catch a little bit of a gain.
Okay.
But that's how that works in a small
They
circle.
try to equalize the math. That
Exactly.
Makes sense.
But it depends on, if the district went up 8% overall and your value went up 12, you're probably going to see a tax increase.
Right.
If your value only went up 7, you may see a tax decrease. So it all depends on where you sit with the total district.
Interesting.
It's complicated. And that's for each one that you pay to. So that's school, city, fire,
Right.
library, DDRB, every one of them, a lot of them.
Oh yeah, I forget library.
Yep. All those are nestled in
Isn't
there.
that all online? No, not so much anymore.
Yeah, that's another one of the questions.
Yeah.
The libraries probably didn't see many patrons.
Right.
Correct.
Should their expenses be less? Not a
right.
question I can answer.
No, me either. But a good one to ask.
Yeah, absolutely.
Yes.
Let's see. So what else? Are we at the end of his slides, and now we're in our?
Let's look. Yeah.
Yep.
Okay.
Yay. Okay.
Well, okay, we've talked about new construction, the NIDS, we talked about square footage, chasing sales.
Chasing sales. Let me talk about that real
Go
quick.
right ahead.
Because we get audited, like our ratios, to see if we're in tolerance. And we also get audited to make sure that we're not chasing sales, meaning placing the value of the property on at the most recent sale price. So we're treating everybody the same. So if something sold for $250,000 and they were valued at $210,000, this reassessment cycle, we don't bump them to $250,000, and then the ones that didn't sell, leave at $225,000. They actually check for those differences to make sure that we're not chasing sales, and it's a big deal in the assessment As far as being responsible, there's counties before that have been, I guess they've been
Caught or,
censured for chasing sales. I mean, it's easy to do.
Right.
You don't really need a staff.
Right.
With the computer system,
computers.
you can just take it times the sale price.
Right.
That's not what we do though. The sale price is involved in the universe of properties to arrive at the multiple.
That makes sense.
So,
Absolutely.
good question.
Yeah.
Let's see, what else? We've talked about above grade bedrooms and bathrooms.
So the one at the bottom, basically our assessor's offices and duties, county responsibility across the nation. Are those duties held by other offices in more rural areas or in cities and urban areas?
In Missouri, they're all county assessors, except for one, the city of St. Louis, and I think Jackson County as well. But there's a myriad of difference. In Illinois, they call them supervisor of assessments. It's just different. But fundamentally, it's the same process. It is. I talk to assessors all over the United States, about their shops and what they're doing and how they do things, and it is basically the same. It is the same.
So how many people are in the assessor's office, or how many people work for?
We're budgeted at 50. We're carrying about 46.
Okay.
We're pretty efficient as far as people to parcel ratio. I'm blessed. We got a good staff, both real and personal. We do. They're educated. They're smart. They care, which is important.
Yeah.
Absolutely.
Especially doing what you do, so much of it is, or so much more of it is public facing than I would have thought.
And it's personal.
Right.
I mean, when you're talking about tax, you're talking about money, and money is personal to people. So
It
we
is,
want to be
and-
we want to be right.
Yeah.
Why would we not want to be right? Why would we want to be high? Like I said,
Right.
and to the converse, if you're low, we could put everything on at 60% of the value and never get a hearing.
Right.
But that's not right either.
No.
And if you think about the big picture, if everything's at 60, you're still going to pay the same tax
Right.
because
Yeah.
it's the budget divided by the value creates the tax rate.
Right.
So if you're at 60%,
So if you want to
tax
impact
amount's
it,
still going to be the same.
impact the budget.
Right.
Right.
Yeah. What you don't want is somebody at 60, somebody at 100, somebody at
Right.
90, one at 40.
Right.
Yeah.
You want it
consistency
uniform.
and- Exactly.
But that's one of the reasons why, like, I even wanted to reach out to you is because I've heard so many good things about you and how you actually do care and you implement that and you instill it in the people that work for you. And so, again, we created this as a
Right.
free program for home buyers, not just in St. Charles County though, but anywhere.
Right.
And that's, we want.
Yeah.
Thank you for that. I do.
Yeah.
I do personally. I'm not a bureaucrat. I'm not a politician. I'm an appraiser. Fortunately, I love my job. I love talking to the people. I love explaining the situation. I mean, if we're wrong, I am the first guy to make it right because I don't want you paying on something that's not right. I mean, there are going to be disagreements. There is. That's why there's a Board of Equalization and a state tax commission. If it gets to the state tax commission level, I mean, we do a full narrative appraisal on your property. I mean, if we're wrong, something's way out of whack.
Right.
So, I mean, we just don't let it get to that point. It just becomes a disagreement in value. And we have them. We don't have many, but we do have them. We try to clear them all up informally.
But one of the first things you even said was like, hit me with the hard questions.
Yeah.
And I appreciate that. Like, because you are my assessor. If I do find a discrepancy, I'm going to be like, hey, what's going on here? And you're going to let's
Right.
talk about it.
Don't be
Right.
afraid to come in. If you've added something, we're not going back 20 years. That doesn't happen. It's another myth.
Right.
We don't do that. We want it right. Very seldom does it ever get increased. Really never. I mean, if you come in and we find that comps are higher than what we have, we're not going to raise it, because it fits within our statistics at that point. That's not what we're there for. We're there to make sure that the value's fair and equitable.
Well, we really appreciate your candor and your being able to really explain this whole process to us, and absolutely your availability to be willing to come here and do this with us. Because again, as Joanne said, our purpose here is just to make things as transparent as possible and give everyone information that's going to help them make better quality decisions.
We want an informed consumer.
Right. And reach out. I encourage you to reach out. I get, how can I say this and be politically correct? I get that you may call a representative or a government official and never get a response. I get that same thing. I dislike it. If you email me or you call me, I will get back to you. There's absolutely no doubt in my mind. You can ask any of our staff. I never let a day goes by where I don't return messages or emails. I just don't do it. Now, if I get 600,000 phone calls, something's going to be different.
It may take a hot minute to get
exactly.
through them.
But I will answer it.
You may have to filter through
it's my
it
job. I like
a little
it.
bit.
Right.
Well, and we appreciate that, and thank all of you who might be checking in and following us through this journey. We really appreciate that. You will be getting some follow-up communication from us. We'll send out some emails, some more. Ask you what you thought of it, and certainly would welcome any questions, any further questions that may have come up. If there's questions that you have for either of us or for Scott, you can reach out to him directly, or feel free to filter that through us, and we'll have this conversation. Whatever it is that you need, because that's why we're here. You'll also get a list of some of the many other future and past presenters that we have, in case you want to have a conversation with someone and we don't have them scheduled for another 6 months. So if you have questions about insurance, if you have questions about construction, we have folks that can help answer questions in pretty much every arena. Home
and if we don't, we'll find them.
Yeah, exactly.
So
we've
got the network.
Yeah. So so please, when we send that out to you, if you want to have a conversation with anybody, go ahead and click the box and we'll introduce you. You'll get a link to my Calendly, so you can book a time slot on my calendar if you'd like to have a conversation about whatever part of real estate you want to talk about. And I know Joanne's always available.
I make myself available. So yeah.
Well, thank you for the invitation. I appreciate it.
Well, thank you. This has been a wonderful conversation.
Okay.
We do have 2 questions.
Great.
Absolutely.
The first one is, what do assessors have to do to be certified?
Let's see. Technically, an assessor that works for the county government doesn't really need anything. But an appraiser to be certified, I mean, there's a litany of things that they need to go through. As far as an assessment or an assessor, I mean, obviously there's in-office schooling, there's training and those types of things to do the job based on what they're doing, whether they're data collectors or review appraisers. But being in an assessment office is actually exempt from the appraiser's license law. Although I'm an appraiser, so I adhere to those standards.
And then the last one is, do all loans include the taxes in the payments?
No.
That's a good question.
That's a great question. That doesn't mean that you won't have to pay your taxes.
Yeah, you still got to pay the taxes regardless.
There's often, though, the possibility where you don't have to escrow, which escrowing rolls the taxes into your monthly mortgage payment, including your insurance. However, you can opt out of escrow. It's not always advantageous, however, and one of the reasons why is you may have a slightly higher rate. Usually it's 1/4 point. Sometimes that happens, sometimes it doesn't with the loan to value. But the other part of the reason why you would possibly pay a higher percentage point on your rate is because there's more risk. And so if lenders want to know that your insurance is paid because if there's an accident of some kind, they want to know that their asset that they're in, they have money on, that they're loaning money on, is going to be whole. And then they also want to know that your taxes are getting paid, because if your taxes don't get paid, you get tax liens put onto your property, and then there is the possibility of somebody coming in, paying those tax liens, and then taking the property for their own, and you're out a home, and the mortgage lender is out their investment.
Plus the interest
that
and
you're still
penalties
liable
is big.
for.
And the interest and penalties.
Right.
Interest and
So-
penalties is big. I mean, it's a big amount.
It is.
So-
and just because, as she described, saying you're out the property and the lender is out, receiving the money from you, that does not release you from the responsibility to pay the lender because you signed for that note. So even though you don't own the property anymore, you still have a loan, an outstanding loan. So there can be devastating financial consequences of that.
And so, yes, in short, there is that option. It's not always beneficial.
Yeah, my recommendation, as it always is in these cases, is when you're thinking about entering the home buying arena, one of the first places you need to stop is to talk to a qualified professional, loan professional, and
Get your
really,
financing.
yeah, and outline what it is that you want to do, what are your goals, what would you like this to look like, and they will match you up with the right path and the right process, also bearing in mind your current financial situation. So do not please take an easy button when it comes to selecting your mortgage and just go online and say, yeah, this is like Geico Insurance. It is a little bit different. It's a lot more complicated.
You really
So,
want to trust your lender.
yeah, and it is the process of borrowing for, selecting, and actually purchasing your first home is typically several months. In this marketplace, it can be longer because it may take us a hot minute to get you under contract. But it can be a very intense and in-depth process, and you need your partners available to you. And we end up having a very close, intense relationship, right, for that period of time. So always just have those conversations and lay out what you want to do, and listen to what's available, because also, quite honestly, what is available to you today, or what is right for you in the current marketplace right now, is certainly different than when your parents bought, or your uncle bought, or your grandmother bought, or your boss's friends bought. So everybody has advice, right? But the things in the marketplace are changing so much. We were just talking about this before we started, about projected credits and home buying credits and what's this going to look like. Things in that marketplace have changed substantially, even over weeks and months. So get the most current, the best information by having a actual conversation with somebody.
Absolutely.
It's a long-winded way to say, just call her.
Yes. So we want to thank you for joining us today. Please sign up for the next First Time Homebuyer Series at the end of May. We have Meredith, correct?
Oh, yeah.
And that should be a great one.
Yes.
So
yes,
checking
how
out.
to properly budget to prepare to buy a home, and even after you own a home. There's a lot of additional things you've got to budget for that you may not realize at this juncture.
Absolutely. And we want to thank our Homestead team, Jason Hardy, Greg Aftaev, Andros, for allowing us
All of
this
this
marketing team and the space and everything like that.
That's-
So thank you. And again, thank you, Scott, for joining us today.
Thank you.